May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar index. The US dollar index. First thing we're going to take a look at first is the economic calendar for the week ahead. Yes, I have some things highlighted. Monday, we have a bank holiday, so won't be a whole lot of action in the markets. It'll be a very thin range. It's going to be rangy and not too good to be trading. All right, Tuesday, Wednesday, Thursday. These are the days you want to get it in. We have ISM for the U.S., GDP for the Aussie dollar. You can see it Tuesday, Wednesday. Wednesday we got a job opening. All right, and job openings, and we're going to see some more employment data come Thursday for the U.S. dollar. We also have CPI for the Swiss. But Friday is the big day. That's non-farm payroll. This is the market. This is the news event that could have a huge impact on the market. It could reverse a market. All right, CPI data, non-farm payroll, and interest rate. Those that kind of news can reverse a market. So you want to be clear. You want to be flat during those times before the market before the news comes out, and you want to fade the move once the news does come out. That's the best way to attack. If you're going to trade those days, that's the best way. Wait for the news to announce, and then get in the markets and probably fade the move, because it's going to be a big move one way, and then it's going to be the actual real direction that's going to go in after that. So let's look at the U.S. dollar index now. We're coming back to the monthly. All right, what do I got here? I got a trend line. Hey, are you trading trend lines now? No, I'm not trading trend lines. All right. I mark the trend lines to mark structure, to mark where the market is in structure. That's it. All right. I don't place a buy entry here, or buy entry here. All right, because the market come by and sweep your stop loss, and you're out of the trade before it takes off. I mean, just don't do that. Just don't do that. All right. So, all right. What I want you to notice here is one contact here, one contact here, one contact here. All right. It's hitting this trend line very perfectly. And where this is currently where the market is. All right. The month of July ended ended what was a long streak of bearish candles. All right. 7 months. Right. And then we finally get a bullish month that was a bullish engulfer to the candle before it, the month before it, right? But August closed bearish and passed the halfway point of the trading range of the previous candle. But what I want you to notice is when we are here at these trading points, let me zoom in just quickly. All right, I don't want to spend too much time on this. You see, I didn't know we was going to get in that close. Golly. All right, so what I want you to see is once we make the low, we're down here how long? 1, 2, 3, 4 more months before the market starts to lift off and move the opposite way. 4 months, all right? Let's go to the next time it makes contact, which is a good ways away, right? All right, this is the low made. We never go past that low, right? Got it? I see I gotta make a small adjustment on this, on the, there you go. All right, there. All right, now I'm going back. All right, and you can see I still didn't hit it. I was close, but if we move it up just a little bit, all right, you can see we never went past this low. But after we made that low, 1, 2, 3, 4, on the fifth month, that's when we start making bullish engulfers and start to move back up the bullish leg. All right, and now we're coming to the current month. We've made this the contact the month before, right? And so far we only have one full candle. I'm expecting 3 or 4 more to be right on the same level, right? Without taking this low, just like it did in the previous ones down there. Uh, I think it's reasonable to have that expectation because you've seen it repeat once already, right? I'm thinking we may see some sideways action before the market moves up, and I do believe that the market is going to move up, but it may move lower before it starts to move down. I mean, before it starts to move up. But I don't think we're going past this low. All right. Just look, just considering what what the market has done when it hit this trend line before. All right, and it's hitting this trend like sorry, it's hitting this trend line like I said, damn near perfectly, right there. I don't know why I can't. There you go. All right, but it didn't go past that low. Stayed down here for a few months. All right, didn't go past the low, and we're down here for a few months before we take off. So I am looking at that and studying it. I think it's a fair thing to do, but uh, there's nothing to say that we won't take that low out. All right, that could happen. All right, but you see how we took this high? What am I expecting for this month? For the month of September, I'm looking for September to break out of the smaller range. All right, I'm looking for the month of September to give us a breakout in either direction, in either or direction. But what I want you to see is on the opening of the range. I'm sorry, the opening of September. I say because we took this high, we took the high of the previous month and closed just below the 50% of July's candle. Say that we are going to trade towards the low first. We're going to take that low first, and then We're going to start up. Then we're going to take that low first, only because we already took the high, and this candle closed very bearishly. It was a small wick, and I think that low is probably going to we're going to wick past it, and then we're going to see the market move up. All right, we'll see how things open in very shortly. All right, because today is Sunday. All right, so if we go to the weekly, let's look at the current price action. You can see how August has been just 1, 2, 3, 4. Look at this. Since the first candle in August, we've been in this consolidation. That is typical for summer months. It's typical. All right. You can see we pulled up and then had this pullback. All right. The market moved up. All right. Sweeping these highs into this area of supply here, because that is a wick of supply, and we were well within the what do you call it? The premium of this wick. If you put your Fibonacci retracement tool and you see that this is 50%, price did not go past or close past that 50%, and you can see we probed this high into the premium. So price does come down. All right, and if we're looking at wicks, we did not go past the 50% of this wick, and we have all these wicks down here. But what we're seeing is sellers coming in defending, right? This one closed bullishly, yeah, but that is a very bearish close, in my opinion. Even though it closed as a bullish candle, it's still, you can see the influence of the sellers. The sellers are clearly stronger. All right, and but let's take a look at that low. Let's take a look at this low. I'm looking at those as a draw on liquidity, but I'm looking at this low as the protected low, and I think we're going to go a little bit lower because we have room to go lower. All right, but you can see how these closes are pushing down and pulling back within the range of the previous candle trading range. That's very interesting to me. We did push down, but we closed well within the trading range of the previous weekly candle. So what do I see for September? I think things are going to go a little bit different. I do, because you can see we have a push up and a pull back. Does it stop there? Does it stop there? It could, but I think we're going to hit these lows. We're going to sweep some liquidity for a move up before it goes. We're probably going to generate some liquidity again. We might be down here we might be in this trading range for a couple of months, couple of more months, maybe three to 4 months. You know, that's a lot of time. Let's go to the daily. All right. If we go to the daily, what we can see is, let's establish, what are we? Are we bullish or bearish? This is some sideways action. I have a better word for it, but I want to keep it clean. But this is some sideways stuff that is kind of indecisive. Yeah, it's more bearish than bullish for sure. But if this is the low, and we have a break of market structure here, and this is the high, we are still within this low and this high with this bullish break of structure. This is correction territory. All right. Once we break this, then I'll be like, hold off on shorts. Once we close past that low, then I know shorting the US dollar is the way to go for sure. We are a bearish market. But until that protected low is taken out, and until I see the last most recent low taken out, if we are trading below this low, then I'm I'm already saying, all right, the pullback is over with. All right, the correction is over with. We're past correction territory. So I'm not thinking that we're correcting for another impulsive move up. I'm thinking that this this move might start the bearish leg. This might be the start of a bearish leg. So these are the lows I am watching. All right. Again, I'm going to mark the bullish. Uh, sorry, the bullish break of market structure. I'm going to mark this low here as a caution point. Stop looking for longs. That's it. Once we get a close past that, once we get a close past that low, stop looking for longs. Once we get a close past this low, start looking for shorts. That's it. That's the way I'm doing this. All right. We are still in a very rangy period of price. All right, and I'm looking for a breakout of this range. I suspect that we may break out lower, sweeping these lows towards trading towards this low. Just keep something in mind. This is the protected. This is also a protected low of a an area of demand. Okay, if we put it to the, what do you call it? The body, we haven't hit it yet. If you put it to the top of the range of the candle of this last bearish candle, and then you see the market push higher here, I'm definitely looking at the body here, and I'm looking at when we get in contact with it, I'm going to be looking for the market to turn around. That's what I'm going to be looking for. I don't know why that color's there. I'm going to put that here, but this is the way I'm looking at the market. I'm still thinking there's a chance this market pushes up because the higher time frame says the structure is there. Yeah, uh, we're moving bearishly for sure. We're moving bearishly, more bearish than bullish right now. I don't know what I'm doing over here. There you go. All right, but if once price comes into contact with this demand zone, I'm going to be looking to see if, sorry, I don't know why it's doing that. I'm going to be looking to see if we can find it'll find its footing for a move higher. So I already gave you the, if it does this, then that. All right. If this, then that. I already gave it to you. All right. If it goes past this low, stop looking for longs. If it goes past this low and trade and closes past that low, start looking for shorts. That's what I'm looking at. If we break higher on this in this consolidation, we see a candle close above this high, above the highs of this range. Long, buy it. That's it. I will see you in the next video. Thank you for watching this long video. I apologize for it being so lengthy, but I'm hoping that you got something out of it. If you do, leave a comment and make sure you hit a like. and look for the Euro USD uh, video that I'm about to do right now. Thanks.